Hi, Michael. Thank you for being here today.
Great to meet you, Jasper.
So, could you first of all tell us who you are? Maybe tell us a little bit about your upbringing, your career, etc.
Yeah, I'm 45 years old, have worked in the investment business for close to 25 years now, over 25 years now. Going way, way back, I discovered the stock market when I was 10 years old. It was a school project where we were, after school project, one of our teachers was analyzing, teaching us how the stock market works. So we picked companies like McDonald's and, the IBM. My dad had an IBM computer back then. We were just tracking the stocks back in the old days by newspaper. We didn't have internet back then. I'm feeling old. But it just fascinated me from a very, very young age. So from the age of 10 years old, I was completely fascinated by the stock market, and I knew exactly what I wanted to do when I grew up. I wanted to work in the stock market. So that was kind of planted the seed of my passion for investing. Out of university, I ended up working at an investment firm in Montreal for about 18 years on the institutional money management business. And it culminated from 2012 to 2018, where I ran one of the largest market neutral funds, hedge funds in Canada, with my partner, Charles Hager. I was having a great time, was a partner at an investment firm. And then I was blessed with twin daughters. So I had three girls before that, under 8, and I had twin daughters on the way. So I had five girls looking me in the eyes under the age of 8 years old. So it forced me to make a career pivot. Back then, working from home was not in vogue. It was before COVID. So working from home was not an option, and I needed to be home more often to support my wife and the kids. So I stepped away, walked away from the partnership, walked away from the career I built up for close to 18 years. I'd always done commodity investing from a very young age. University, invested in oil and gas and just followed commodities throughout my whole career. So it was 2018. The gold price was 1350, as you may recall, late 2018. Gold had hit $1,100 previously in 2015, and that's when I started investing in gold for my fund that I used to run. And so I was at home, I had some money over the investing over the years, and was very, very bullish on gold prices for a lot of the themes we might talk about later. But I thought gold prices had an incredible tailwind for the next 10, 20 years. And the sector, as you recall, was in complete disarray after a 6, 7 year bear market from 2012 to 2018. So institutionally, I could only invest in companies that had producing assets. My old job was, 250 million or more market caps, the more mid, small, mid cap companies. So I never really invested professionally in micro cap stocks. But I asked myself, if gold price is going up a lot and the sector is very depressed, and I'm right about my thesis about gold going, where am I going to make the most money? Is in the micro cap, exploration, resource, PEA stage projects. And at that time, and still up until recently, most of these companies are trading at 5, 10, 15, $20 million Canadian market caps, despite the fact that they had already made a discovery in the last cycle, but their projects have been completely stalled due to the markets being closed and lack of funding opportunity. So I basically made one or two investments. I think my first two investments were Radisson Mining and Northern Superior Resources. That was in 2018, 2019 time period. And it was basically at the beginning just something to keep me busy and make a little money while I was at home with the family. And as I dug into this opportunity, first of all, I saw the breadth of the opportunity was incredible. The valuations, the setups in these stocks, the pricing I could get in was incredible. But I also saw that many of these companies were not properly run. I'm not trying to insult the management teams, but many of them were run by geologists who didn't know a lot about capital markets, about fundraising, how to build a company, how to communicate their message. And that's something as an institutional investor, I had heard literally tens of thousands of pitches from company managements for over the last 18 years. So I knew quite a bit about what the signatures of success were look like, how successful companies were run. And I started to try to apply that to the mining business. So it went from a side project to something where today I own top 3 holdings in 25 to 30 junior mining companies. I'm on 6 boards. I'm an advisor to many companies. And it became a passion for me. I always loved commodities. I've always loved investing. But the combination of becoming an owner, investing your own capital long-term horizon, with also having a hand on the steering wheel in terms of strategy and business development and just building these companies from the bottom up in a sector that I love, has really allowed me to flourish and really have a new path in life, in my career. And just to finish the loop, this 25 years in 5 minutes here. 3 years ago, 2 of my former partners who I loved working with at my old firm quit their old firm and started a new institutional money management firm in Montreal called Bastion Asset Management. And at the time, I was having so much fun investing in junior mining stocks and finding so much fulfillment in that I had told my wife 6 months before, if anybody called me to get back in the business, I'm not doing it. Even if Warren Buffett called me and says, "You want to join me in Omaha?" as my partner, I would say, no, sorry, Warren, I'm really having too much fun in the mining space. I'm going to stick here and do this. But these two guys are two of the best guys I've ever worked with in my life. Great people, supremely talented individuals. And so they asked me, let's get the band back together. So 3.5 years ago, we started Bastion Asset Management, which is another institutional management firm, a hedge fund, small mid-cap equities. So I co-founded that. I have a junior partner there, but I'm a co-founder, and I cover commodities and help our lead portfolio manager, Charles Hager, do the great job he does running money there. So I got my old love back and my new love in mining, do both those things together, and it allows me to cover from a 5 million market cap junior exploration company all the way to Newmont. And that's the range of capital allocation I have, from my own capital in the juniors and then institutional money in the larger stocks. So it gives me a great perspective on covering from A to Z the commodity sector.
Well, we got a lot to unpack here. So first of all, where are you from and where are you based?
Yeah, so Montreal, Canada, born and raised. So obviously I have a strong commodity tradition here in Canada. And so yeah, I've been raised here my whole life. I speak English, French, and Italian. So my father's Italian, learned French in Montreal, and English, grew up speaking English at home.
So first of all, I guess, so just to clarify, so when people see you, when they open a deck and see you on the shareholder register, that is you personally?
I'm glad you brought that up. There's a lot of confusion because I'm known for co-founding Bastion Asset Management. People think that Bastion Asset Management is a junior mining fund. So unfortunately, our CEO, he's very patient. He gets quite a few emails a week from junior mining companies saying we'd like to get some investment from Bastion Asset Management. But Bastion is that 300 million to 10 billion market cap, all sectors. We happen to have a strong allocation to gold right now because our lead portfolio manager, Charles, has been very bullish on gold the last 3 years. But we own companies like, K92 Mining, or, IM Gold or Equinox, or, in that kind of mid-cap space. All the juniors that you see my name associated with, it's my own capital. And there's no competition with our customers because the institutional investors that invest in Bastion aren't willing to take the risk of investing in a $30 million market cap company, nor can you buy one when you have a $700 million fund. You end up owning too much of the company. So there's a clear line of separation. All the stuff you see my name on for juniors would be my own personal capital. And the Bastion is a different project.
How do you separate your time between Bastion and your private investments?
Yeah, I try to be disciplined about that. I spend about 2 to 3 days a week at Bastion. So that's where when I'm there, I'm really focused on the institutional quality names. And then 2 to 3 days a week on my mining project. So my calendar, there's mining days in my calendar and there's Bastion days in my calendar. But in reality, the stuff I learned from speaking to Newmont or K92 Mining, Bastion also helps me on the junior mining, and the stuff I'm doing in junior mining actually also helps me with the majors as well. So there's a good synergy there, but in my calendar, it's pretty rigid. So today's a mining day where I'm talking my junior companies, scheduling board meetings, talking to management teams, new ideas. And then when I'm at Bastion, I'm very focused on the institutional side of the business.
Perfect. And so prior to 2015, when you started investing in gold, did you invest into mining or what? Or
Yeah, so I started oil and gas in the 1997. I remember when I bought oil, my first oil and gas stock, oil was $10 a barrel, and it was so negative, people thought it was going to go to $5. And there was a major magazine in Canada called Maclean's. You may not know it, but it was a leading publication back then, and they had the end of oil was basically the headline of the magazine. So I've learned over the years when you see a commodity where it says it's the end of a commodity. I remember that in the last 5-6 years ago, we were calling gold a relic, right? It's like gold has had no value, and now gold is more than doubled in price. So usually when you see that type of negativity and it's on the front page of most media publications, that's a good time to invest in commodities. So I learned from my first lesson buying oil when nobody wanted it. And oil ended up going to $145 a barrel, do you recall? So it didn't go to $5, went to $145. So I adopt that same approach in gold. In the early 2000s, when the central banks were dumping all their gold, I made a big investment in the gold sector back then. So it was a big, good timing for us. And then in 2007, right before the financial crisis, again, gold was completely out of favor. Everybody was checking a big real estate boom and stock market boom, invested in gold again. So my approach, Asper, is really when I'm bullish on a commodity and the market is extremely negative, that's typically when I roll up my sleeves. And institutionally, I would spend 2-3 years learning every name in the sector and allocating capital to it. So that's my approach. What's been unique about this cycle has been that I've been bullish on gold since 2018. The gold price has continued to go up, but up until very recently, the stocks were not following, which is a very unusual setup. Usually, if you want to get bargains, you got to buy when there's blood in the streets, or you got to buy when everybody hates it, and you got to be betting on a bit of a turnaround in the commodity price. What was unique about this cycle was started buying when there's blood in the streets. The outlook got better and better and better, but the stocks provided continuous value for several years in a row. It's probably why my portfolio has gotten so big and I've allocated so much capital to the gold sector, because I've had so much time to allocate capital at these bargain basement prices. And usually you don't have that much time in the sector. Usually when things get better, the stocks react. So very unique, but it's been an incredible opportunity to have this much time and allocation period to get big exposure to gold.
You are one of, I would probably say, one of the most successful individuals that are investing in junior mining stocks. Would you say, how did you initially build your wealth?
Well, I started investing when I was 16 or 17 years old. So back when I got that bug when I was 10 years old, as a young child, I grew up with a pretty modest family, lower middle class family. Both my parents were teachers. They gave us the gift of education. So that was really what they wanted to give us opportunity to better ourselves. So when I was first job I ever had, I made $5,000 over a summer sharpening hockey skates, and I put that money in a stock, and that stock went from $5,000 to $50,000. It went up 10 times. And so, I had that seed planted in me when I was 10 years old, and the first stock I buy goes up 10 times. After that, I was completely hooked for life. You can imagine the excitement of making 10 summers' wages in one 3-month period in the stock market. So that hooked me. So I've obviously worked in the markets and financially, but most of my wealth has been created through compounding, just finding companies that go up 10, 20, 30 times, whether that was a tech stock that I bought back then, but commodities, different names, investing my own capital. Obviously in my funds that I ran, in stocks that I looked at also as well. That's just allowed the money to compound. And that's a lot of investors try to clip profits, make 10%, 15% here and there. But if you really want to make a lot of wealth, if you have 10, 20, 30, 50 baggers in your portfolio, that's how kind of generational wealth is created. And having the staying power and the patience to hang on to those names. There's one name today, your viewers may know, K92 Mining. It's a stock that I was fortunate enough to buy personally at 45 cents. The stock is $16, $17 today. I'm not saying that to say, look how good my investing is, but more to say that stock is 17. I think it's going to 35 or 40. Good stories in the mining space or any sector continue to get better and better and better. But most investors would buy at 45 cents and say, wow, it went to 80 cents. I've almost doubled my money. I'm taking it off the table. But, owning that stock from 45 cents to 17 and still wanting to buy more today because it's such a great outlook and great business, very few investors can hold for that time period and can have the conviction to hold for that time period. And that's how, generational wealth is found. And redeploying after stock goes up 30, 50 times, obviously you have a lot of more capital to deploy. And then once you have that type of outcome, you're no longer looking for 10% returns in your portfolio. You're looking for names that can really have transformational returns. And you see that in the mining space, right? The Lundin family, other families that have done phenomenally well. They've built their wealth on the back of phenomenally successful stocks that they've held for long periods of time with significant ownership in the company.
If you can hold on to a tier one discovery, a real tier one discovery, or a company that is a tier one company, where you have these sort of like Great Bears, you have Philo, you have the K92 as you mentioned, but most companies, by far most majority of the companies don't go that way. So how are you thinking around taking profits?
Yeah, it's a great question. So yes, you're right. Those tier one Philo-like discoveries are very, very rare. And if you have 2 or 3 of those in your career, you're fortunate and you'll be very wealthy if you held on to the ticket for the whole ride, right? That's where my process of investing when there's blood in the streets or negativity is so pronounced. There's a couple of things, right? This sector, commodity sector in general, it's a roller coaster, right? It's from massive pessimism to massive optimism. So already there on that roller coaster, there's a lot of opportunity in that, right? So if you are investing at the point of the cycle where there's maximum pessimism, your entry points, even on tier 1A or 1B or tier 2 discoveries that end up becoming mines or potentially mines in an upcycle, if you're getting in when this pessimism is rampant, I can go through a lot of names in my portfolio that I bought at, $5-10 million market caps that are not tier 1 Philo discoveries, but that are highly likely to become mines or potentially become mines in this upcycle. So if you're able to buy a tier 2 or tier 1B kind of mine at $5-10 million valuations, and it gets bought out for $500 million to $1 billion, not the Philo $5 billion, $10 billion kind of K92 valuations. But if you buy, that's 50, 100 times or more your money. Obviously, dilution along the way will chop that return a bit, but that's how you can make 20, 50, 60 times your money without making a tier 1 discovery, with a kind of systematic, disciplined approach to adding capital. So I know I didn't answer your question of when to sell, but I'm talking when to buy. You don't need just to find a philo to make exceptional returns if you're taking the cycle into account, because the cycle is going to give you a lot of energy, a lot of juice to that return if you're buying at the right price, because that's the valuation and that's the upcycle that comes beyond it. When to sell? That is a fantastic question. And so a lot of investors don't know when to sell. They love a stock when it goes up and they hate a stock when it goes down. Common kind of retail psychology. So what I do is I'm looking for companies that have the attributes to become mines at a very early stage in the valuation, to look at the attributes of the company. And I have a template for what I expect to see them do. And what if I'm right, how the strategy of the company, how the drilling, how the permitting, how the whole infrastructure of the area should come together to unlock the value of this project. And so if they are continuing to execute along my plan and my commodity outlook remains intact and the stock is flat or down, I'm buying more. If they're executing above plan and continuing on that trajectory and the commodity outlook is going great and I still have lots of upside to my eventual valuation on a takeout or a mine blink scenario, I'm hanging on or adding more. If something derails that thesis, whether it be social license, negative exploration results, poor execution by management, bad balance sheet management, capital structure which gets out of whack, things that could derail my thesis that the company's on the right track to become a mine or a very valuable asset in the future, that's when I sell. So it's very on paper, black and white. My first mentor taught me, whenever you buy a stock, write down your thesis. He writes it on paper, and I still do. I still like to have my own handwriting just to remind me this is what I thought was going to happen 5 years ago. And then pull up that paper a year later and say, how much of those expectations are still true today? How much is still actually actualizing in the company? Or has the company pivoted and changed and their first plan didn't work out, but now they're on plan B, but you can't sell the stock because it's too cheap or you're too committed to it? That's usually when you sell. If your own handwriting is telling you something different than what you expected, on the negative way, it's a good reason to sell. So I'm less driven by price, short term, and more driven by long term. What's the long term value, and how are they executing to the plan? And all my successful investments have executed very well. Obviously, there's hiccups along the way, but have consistently driven towards that value creation opportunity. The less successful ones are, I'm a gold miner today, I'm a lithium miner tomorrow, I'm a copper story tomorrow, I'm changing directions because this didn't work out, but don't worry, we got a new project. Those are stories that typically have massive dilution and massive issues in projects where you're always changing through tune depending on what music's playing in the restaurant that day.
Yeah, no, I fully get that. I fully get that when you say divest the whole position. But how are you thinking around taking profits? I know this is varies. Some investors, they will take the principal off the table once the stock has re-rated sufficiently and gone up X multiples. Some hold on. Some. How are you thinking around taking profits along the way?
Yeah, it's a good question. And I have a different advice for individual investors than I do for myself. And it's not because I'm being incoherent. It's just when I make investments, I'm buying 5, 10, 15, 20% of the company. My target size position is very, very large. So by default, my commitment to the companies that I make is I'm there for 3 to 10 years. So I'm not looking to trade my position. Second of all, when you own that much stock, it's not really practical or reasonable to be able to trade around your position, right? So I'm coming in at $20 million market caps, and my goal is to make 20, 30 times my money. If the stock is up 100% and they're doing a financing, I'm probably actually adding to my position rather than selling it. Because again, my goal is a little different, right? If you're an average investor, I definitely encourage you to diversify your portfolio. If you're up 100, 200%, nobody goes broke taking profits, right? So you're not going to go broke taking profits, but be aware that it might take away some of your future gains. If your stock ends up going 20 to 50 times higher and you sold it 100% up, you're going to have less, firepower in the kitty to do that, right? So I don't think it's a bad idea to take profits along the way. But I think you should, if you're investing in junior exploration companies, it's a very risky sector. Many of your investments will not do well. Full disclaimer, everything is doing well now. The market's in an upturn, but over a 5-10 year period, most of them will not become mines. So if you're investing in this sector to make real big money, the winners are the ones that pay for the ride. So I'm not saying if your stock's up, don't sell it. What I'm saying is if you've got a great tier one story, you got a story that's looking like it's becoming a mine, the cycle's still go in your favor, selling your losers and keeping your winners. Selling your winners and keeping your losers is a surefire strategy to lose a lot of money, right? And so I think it's more nuanced than that. But I have a view of looking for, true projects that can go all the way. And I'm okay with not selling and just holding it in my portfolio. When the portfolio is increasing over time, not adding or holding it just lets that stock kind of drift smaller and smaller and smaller into my portfolio. So some of my 30 stocks are now 0.1 or 0.05% of my portfolio, not because I've sold them, but because I allocate 1% of my portfolio on initial investment, and then I add to it as it succeeds. The ones that don't do well, they just drop down, because the ones that do well go up in value. The ones that don't do well don't get added to, and they shrink in size in my portfolio to a certain point where they become insignificant. So I'm not saying I never sell, but it's more through atrophy and just not adding to the positions that the stocks become less meaningful in my portfolio.
Could you just give us a broad overview of your stock portfolio? Is all in junior mining? Which are your core holdings in terms of size perspective, and and also give some overview of sort of what kind of metals you're in and type of, are all explorers and developers?
So I'll give you, before I jump into individual names, what I'll do is I'll just talk about how I built my portfolio. So when I started, like I said, my view is I'm looking to make 20 to 50 times my money on initial investment. If I don't see that, I'm not going to write initial check. So you have to have the right timing and the right company and the right valuation opportunity. I'll allocate about 1% of my portfolio to start. And then over time, I'll probably do kind of 3 to 5 subsequent private placements. If the company is doing well, the stock price hopefully is going up, I will continue to maintain or add to my position subsequent placements. So maybe I'll get up to 5 or 6% of my total available capital committed on a cost basis to one company, if it's starting to go through all those steps we talked about earlier. And so I've done about 25, 30 companies in my portfolio. The successful ones that really do well will end up being, 15 to 25% of my portfolio at any given time. And my redeployment, you asked when I sell, one thing when I like to sell would be on a liquidity event. I've been fortunate enough to have multiple takeovers in my portfolio over the years. So if the company goes through those gates, gets to a stage where it's likely a mine, the stock's probably gone up 20, 30, 40 times in my portfolio. And there's probably at some point a takeover offer or a liquidity event for that company, which allows me then to redeploy, 20, 25% of my portfolio into potentially 20 or 25 new names. So that's my kind of allocation approach. At any given time, I'm always planting the seeds with new ideas in that kind of $5 to $30 million market cap range to have potential to grow to 25 to 50% of my portfolio. So it's a constant redeployment, but I'm not a fund. I have no inflows. I don't have any other outside investors. So sometimes companies call me and they're like, hey, do you want to do a placement? I said, well, I have nothing I want to sell right now. There's no liquidity events that are happening. There's no takeouts in my portfolio this quarter or this month or this year. So I'm limited to the amount of deals I can do based on the liquidity that's provided by the successful investments. So that's kind of my capital allocation approach. So at any point in time, I'm excited about making, I probably make about 5 to 7 new investments per year of size, kind of planting the new seeds in the portfolio. And then there's, every year there's 3, 4, 5 of them that grow up from toddlers or babies in the portfolio to be teenagers or young adults, and they really start to execute and get traction in the market and grow into very meaningful investments in my portfolio. And those are the ones where I might join the board or, spend a lot of my time on, because now they're 15, 20, 25% of my portfolio. So I want to be very, very engaged with those companies. You can ask my juniors or my toddlers in my portfolio. I'm still very engaged with them, but it's really more about getting them ready, make sure they're financing themselves properly, setting up the signs of success for them, not to make any mistakes in the early days of setting up the company or getting the company going, recapitalizing it, getting it rebooted for success. So there's been that duality in my portfolio. Some of the larger names, Northern Superior Resources is currently my largest position in the portfolio. These are companies we'll talk about Europe in a bit, but we're going to Europe with Northisle Copper and Gold. So they're another big name in my portfolio. Radisson Mining is a large name in my portfolio. Group 11 Resources is another big name. Capitan Mining, Astra Exploration. These are just some names I'm throwing out there. These are all would be above 5% of my portfolio. Big Ridge Gold is another significant investment for me in my portfolio. Some recent ones I made, Maple Gold. There's a bunch of them that are kind of in that 3 to 5% range. Happy to go through my portfolio in more detail, but those are kind of the larger investments. But there's a lot of them that are in that second tier of size that I'm also equally excited about, that have potential to go up quite a bit, that I'm either investing more in or growing in. But those larger names are names that have really executed well on their strategy. where I've made multiple investment rounds in those companies, and where I think they're really teed up for the next step, which is really the market recognizing them as future mines. And that's really where you start to get more liquidity, more institutional support, where the average investor gets more excited. It's most investors like me is at my old job, I can't touch something below 200 million market cap. So the move from 200 million to $1 billion is a very exciting stage for the company because it's more accessible for more investors, and very few investors want to take the risk. All those companies I mentioned, I all invested in when they were, 10 or 15 million market caps. But as you mentioned earlier, not many people want to do that. Not many people have the stomach for that. They don't have the mandate for that because most of the money is other people's money. So you can't do that. So it's venture capitalist, what I am at the beginning in the early days. And then as the companies become a little bit more investable, that's a horizon where there's more opportunities open up for those companies to move even faster and develop their projects quicker.
But so it's all in junior mining. And how are you thinking around metals?
Yeah, so since 2018, or even 2015, I've been very, very bullish about gold. So the majority of my portfolio is anchored towards gold. But a couple of those companies I mentioned, Group 11 is a zinc, copper, silver story. I have a phosphate name in my portfolio. I have a bunch of copper names in my portfolio. So I'm not a unidimensional gold buck. I've covered oil and gas. I'd happily look at oil and gas again if the right setup came for us in terms of what I look for. So I'm very agnostic when it comes to commodities, but what I am focused on is what's the outlook for the commodity? Where is the market valuing that? And is my outlook superior to the commodity and superior to where the market is valuing that opportunity today? So gold has been in that place for the last 6-7 years. So if, for example, lithium 3 years ago was the hottest thing in the market, I would refusing to take a meeting with a lithium company if they called me, because the lithium price has gone up 1,000%. The average junior lithium exploration company, even pre-discovery, had a $50 to $100 million market cap. And I could buy the same opportunity in gold for $5 million valuation with, in my view, a better outlook for the commodity price from there. I felt lithium was going to go down and gold was going to go up. So I'm very much focused on, is the commodity going to be flat to higher? Like if I have a negative outlook on the commodity, I'm not taking a meeting, because I've learned the hard way. If you think the commodity is going down, you could be the best stock picker in the world. You could have philo mining in your portfolio. But if gold price is going down in half, that stock is probably going to go down, even if they're making great results. And they have a hard time financing themselves in that intermediate period where there's a bear market for the commodity. So commodity has to be going up. Valuations have to be attractive. And most importantly, I have to feel the project has tier 1 potential. So or not tier 1, potential to become a mine. Let's say it's a mineable project at some point in the future. So I'd much rather invest in a zinc project that I think is going to be potential to be a mine than investing in a gold project. I got a call yesterday from a gold project that I'm like, this is never going to be a mine. I don't care that you're a gold stock. I don't care that the market's going up. It's not going to ever be a mine. I'd much rather buy the project, the zinc project that has potential to be a mine, than the gold stock that has no chance of being a mine based on the project attributes. Because becoming a mine is really how you make money in junior mining, making those discoveries that the majors and mid-tier mining companies want to covet in the future. So I'm agnostic. I have no problem investing in different commodities as long as the setup is in my wheelhouse. I've been biased towards gold, but I'm open for any commodity as long as I don't have a negative outlook on the future price of that commodity.
Let's touch on gold and copper, which are sort of the main metals that are driving it. Well, you're usually investing in that are driving this cycle. What is your outlook for them, and where are we in the cycle?
Yeah, I mean, I've been very bullish on gold. I think the gold equities now are extremely attractive relative to the metal price. So if you look at the valuation, let's talk about the producers, the copper stocks. There's more consensus up until recently. Copper had a lot of generalist investor consensus that it's the new oil, or the metal of the future, let's say, that we're going to be needing to transition for data centers and EV vehicles and decarbonization of the economy. So if you look at copper stocks, they've done well. But if you look at the copper price, it's sort of 450-ish, sort of been where it's bouncing around the last 3-4 years. If you look at the average copper stocks, you look at their valuations, their cash flows, their embedded NAV calculations, all the analysts are using anywhere from $4.40 to $5 kind of copper price in their models. And most of the stocks have, 5 to 6% free cash flow yields in that scenario. So you've got a copper price at 450. The market's pricing in, $4.50 to $5 copper. So to really make money on those names, I'm talking about like significant returns outside the exploration space, right? You need to have copper price go up a lot. $6, $7, $8. And the supply-demand dynamics for copper are such that I don't disagree with that thesis. That's one where my outlook for copper is positive, but unfortunately the market is positive as well. So therefore, they're already pricing in a pretty good copper price. So the only way I make money is if my outlook for copper is correct and copper goes much higher from here. So that's why I'm open for business on copper. But contrast that with gold, right? When gold was 2,000, my view was it's going a lot higher. But the gold stocks were still negatively pricing in $1,500, $1,600 gold. And this resource junior stocks are pricing in a scorched earth scenario where there's just no capital and the sector is in total disaster. So there I had a positive outlook for gold. The fundamentals were improving for gold, but the investor valuation of these companies was extremely low. And so that's why I've been allocating more capital to gold. One more example is to get into my head a bit more, oil and gas. Oil and gas is such where the last 3-4 years, I have an affinity for oil and gas. I think the long-term supply demand for oil is actually quite positive. Like the supply of oil is going to be muted going out 10 years because there's no capital going in. All the companies are paying dividends. The big shale boom we saw in the US is peaking or at least going sideways now. The negative situation we have now is that OPEC and these countries that have excess capacity are increasing production. And so until that supply is soaked up by the market, oil prices are muted. But my long-term view of oil is constructive, especially relative to the market, which is very bearish. So I like that setup. The problem I have is near term, not as constructive. And the valuation of these stocks are all pricing in $65, kind of $70 oil. If I had the stocks pricing in $50 oil when the price was 65 because the market's view was negative and my view was positive, that's a setup where I'm like, okay, let's roll up my sleeves. Let's get to do 100 meetings in the next 30 days of oil and gas companies that I would like to invest in, and let's start allocating capital. So that's sort of my overall framework for how I get engaged. But copper, long-term positive, gold, long-term positive, and then oil, even longer term, not yet, but positive. So that's about where the stock's trading and how much opportunity I can find in each sector from a valuation perspective. So that would be sort of get a bit of an attitude towards those three commodities.
How do you view jurisdictional risk, and do you favor or avoid certain jurisdictions in mining?
Yeah, I think jurisdictional risk is too black and white in the space. Investors have too much of a black and white attitude towards it. So I only invest in Canada, Australia, and the US, only in tier 1 jurisdictions. And if it's in an exotic place like West Africa or some parts of Latin America, I don't touch it. I have a more nuanced view. All my view is about how much risk I'm taking, what's the return potential of my investment. There are places in Canada which are more risky to invest in than West Africa. And what I mean by that is certain parts of Canada where you're never going to get a mine built. So you have a tier 1 jurisdiction, same thing in the US, tier 1 jurisdiction, but you're never going to get a mine built due to the micro of those countries or provinces or states that you're in. They're just anti-mining or too close to the general population or rich, anti-mining areas. So you've got to be very nuanced. When I look at a project, again, does it have the attributes to go all the way to become a mine? And one of those attributes is there community support for a mine? Because you could have a philo-like discovery, but if you find that in downtown Montreal, you are not building that mine ever. So there could be $50 billion worth of copper under your feet, but if it's in the wrong area, it's not getting to be built. And so understanding jurisdiction is, what is the community support? How easy is it to get into production? Another thing investors don't look at when looking at jurisdiction, Jasper, is, in Canada, we're trying to fix that. And I really hope they do. But in Canada, the average timeline from a discovery hole to first production is 27 years. And that's affected by cycles of capital availability, permitting timelines, stopping and starting of projects, consultations. So in West Africa, if you make a discovery today, you could be producing gold in 5 years. Now, if you run a discounted cash flow model and look at the impact of NPV of producing in 5 years versus 27 years, it's astronomical, the value. I mean, cash flow in 27 years is basically worth nothing in a discounted cash flow model, if you do the math. In 5 years, it's worth a lot. So investors heavily discount, West African or with good reason. There's a lot of volatility there. There's risk you have in those countries, but they're not pricing in the advantage of being able to get into production very, very quickly in a positive commodity price cycle. So for me, it's about what's the price I'm paying? What are the attributes of the project? How much money do I make if I'm right? And then what are the risks I'm taking? So if I'm getting something at a 10% of the valuation in West Africa for a similar project that I would have in Canada, but there's a quicker timeline to permitting and I'm comfortable with the current environment in that country, then I'm very, very open to being in jurisdiction. One of the first oil and gas stocks I bought was in Kazakhstan. It went up, 20 times return. So, but it ended up getting nationalized in the end. So you got to be careful of the risks that you're taking in these countries and the price you're paying. But all that to say, it's very specific to the location and the project and where these pendulums are swinging. Look at Argentina. It was a terrible place to mine for 15 years because the government was so unstable and anti-business. Milei comes in and business is fantastic. He's had a little setback recently, but it's still much, much better. So typically the pendulum swings back and forth. I like buying when the pendulum is negative because it's probably going to get better over time than worse. And you have less risk than buying when it's a fantastic environment, especially these countries that tend to switch back and forth to pro-mining, anti-mining biases. But again, it's very local and it's not as nuanced as saying, I don't do jurisdictions.
So if we then look at an individual, we will soon get this. It's probably the final question before we get into some of the companies in your portfolio. But so on an individual stock, what does your due diligence process look like? Essentially, how do you evaluate junior mining stocks? How do you determine if the valuation is fair or not?
So my first mentor in the business when in my early 20s, he was a very big believer in networking. And he always told me you have to surround yourself with people that are smarter than you. And so a lot of people don't do that, Jasper, because their egos are too big. They don't want to be around people that are smart. They want to be the smartest person in the room. But my attitude, adopting his attitude, has always been the more intelligent opinion you can have, the more smart people you have in the room, the more insight you can get to an investment, the more likely you are to make a good decision. And so being a non-geologist, investing in junior mining, there's a lot of things that I don't know. And I've been looking at commodity stocks and geology for 25 years, but I don't have the credit, the PhD, the gravitas to really dig into a geology and be able to tell you it's a mine or not. And so what I've been doing over the years is developing a network of geologists, of mine builders, of metallurgists, of savvy investors in the space that do this full time like I do, and sharing information and going. So what I typically do is half an hour first meeting. Junior meets me, give him 30 minutes. If I really like it, I'll go past half an hour and we'll learn more, but it gives me a 30-minute quick look. And in that meeting, I'm not deciding to make an investment. I'm getting my feet wet. I'm understanding the situation, the setup, the geology, the cap table, the strategy, the background of the company. And then if it really gets me excited, what I'll then do is typically, based on my network, I have different experts in different geographies. I go, this is a project that, geologist XYZ knows the area really well. I'm going to send an email and say, hey, have you ever looked at this project before? Oh yeah, I worked on it 15 years ago, or I know someone who did. And so I'm getting that kind of inside information. It's insight from previous contact with that project. And then I have other geologists that I work with in even more detail where I say, okay, look, I'm about to make an investment here. I've checked out, my network has come back positive. Could you do a deep dive on this and let me know if I'm missing something of significant flaw? Is there a fatal flaw in this project? And so that's where I'm checking on the geology, on the cap table, on the strategy, on the infrastructure, on the jurisdiction. A lot of that stuff I can verify, myself, and I can see if it's fixable or not, or if there's a red flag there. And so it's a kind of a systematic checklist that I go through. And then on valuation, it really depends on the valuation. If I get a project that ticks all the boxes, but it's coming at me, pre-drilling their first discovery hole or post first discovery hole with $150 million valuation, well, not to say it's a bad investment, but if I want to make 20 times my money, first stop is $3 billion market cap with no dilution, right? So it's got to have the right valuation setup to, if I'm right, allow me to have those kind of exponential returns. And we might be entering soon, Jasper, a market where, I hope so, because we'll all do very well with our investments, that the valuation of the whole gold sector, equity sector, is going to rise dramatically. They're still dramatically undervalued versus where they should be. We could be in a hot market, an exciting exploration story pre-drilling could have a $50 to $100 million market cap. We saw that in lithium space. We saw that in previous gold cycles. In that market environment, it's going to be harder for me to allocate capital, right? Because the entry price of that, risk reward lottery ticket is going to be a lot higher. And therefore the bar is a lot higher of having a project that can't fail or have no mistakes, and potentially not being able to make mistakes because the price to get in is too high. So that's why I'm allocating capital aggressively right now. But if gold goes to 10,000 and we're talking on CNBC about gold 24 hours a day and our Uber drivers are talking about gold stocks, I'll probably still own a bunch of them based on the seeds I've planted, but you'll probably see me doing less allocations to gold. investing because the risk versus reward or the multiples of money I want to make won't be there anymore. But that's why it's been so fun the last 7 years, because it's been an environment where you can consistently write checks to stories I'm really, really excited about that have those kind of attributes in an environment where the sector is getting better and better every day from a fundamental gold price and backdrop perspective.
Let's jump into some of your holdings. Let's jump into your largest holding, Northern Spear Resources, which probably most of the listeners here are familiar with. You hold, I think, 12.2%. Correct me if I'm wrong, of the company.
Yeah, sounds about right.
So, could you give us, especially for those who aren't familiar or aren't that familiar with Northern Spear, give us a quick overview of the company and also how you put it together?
Yeah, so North Spear is actually one of my first investments I made when I dedicated myself maybe a year into my odyssey into junior resource investing full time. Loved the asset, classic template of a company that had just world-class assets. I could pull up the LinkedIn post that I made when I made my first investment in 2019. But at the time I said, these assets are so phenomenal. There's probably 3 junior mining companies hiding inside of, like 3 quality junior mining companies hiding inside one investment. And the background of the company was run by a great man, Tom Morris, quaternary geologist, kind of those grassroots prospector types who knows how to do really good work and find great projects. And he had amassed a massive portfolio of assets in Ontario and Quebec, really good grassroots projects. The flaw of the company was 7-year bear market. So from 2012 to 2019, there was just zero money for exploration. So that was one. So the company was completely starved of capital, unable to move many of these quality projects forward. And second of all, Tom was a geologist and not a finance guy. So he didn't quite know how to raise money, had a hard time raising money, was raising money from the wrong people, flow through funds, hedge fund, warrant clippers. So the stock was constantly under pressure because that was the money that was offered to him. No criticism of him, but that's the template of many, many resource companies. So I found this company in 2019. They were basically running on fumes, had a little cash in the bank. I ended up buying 20% of the company because I saw a huge opportunity, and I joined the board. So these assets are phenomenal, and we're going to get you in front of the right type of investors to start financing the company. And so that was from 2019. Fast forward to today, I was almost right. There's now 2 companies at North Spear. We have an Ontario assets and Quebec assets. We talk about that a little bit later. But the Quebec assets have blossomed to a point where we've got about 4 million ounces in Quebec. And the area that Tom Morris had picked out as the Chibougamau camp, way back when, in the early 2010, 2011 time period, has now blossomed into one of the largest, most exciting gold camps not owned by a major today. So between IM Gold and Northern Superior, there's about 12 million ounces already discovered with very minimal exploration. And, the CEO of IM Gold and myself, we've both said publicly that we think there's 15 million plus ounce potential or more in this camp. So having 15 to 20 million ounces in a tier 1 jurisdiction in Quebec, Canada, extremely rare. These are like Detour Gold type project size, Cote, it's another project that's similar size to that. So these are very, very valuable assets. And North Spear, under my guidance and others, has been able to finance the company properly. We've done a bunch of acquisitions in the area. So part of the other problem, Jasper, was, North Spear owned a lot of the land in the area. There's a few other deposits, 1 million ounces here, 1 million ounces there, that were owned by small junior mining companies. And if you want to build a camp scale project that's attractive for a major mining company, the last thing they want to do is come in and deal with 6 junior mining companies with 6 entrenched CEOs who don't want to lose their job, who are running companies, it's their project, right? So what we've done over the last 5 years, Simon Marcotte as the CEO and I, we came together a couple of years ago. I owned a big part of the camp in North Superior. He owned the Philibert project at Royal Fox. We merged the companies together and now have aggressively pursued a consolidation of the remaining part of the camp, where today we have close to 4 million ounces, 70,000 hectares of land, and really the dominant land position outside of the Nelligan deposit, which is the 8 million ounce deposit in the middle of the project. So we've done a lot of the heavy lifting, a lot of the hard work. And so value creation can either be done with a drill bit, right, where you make new discoveries, or where you have a camp where you see something early where others don't, and you're the active consolidator putting all these ounces together. That's the strategy we've adopted at North Superior very successfully. And we're really excited entering into this bull market for gold, controlling a camp of this size. And now that it's very consolidated between 2 companies, I think it can create a lot of value. I saw a stat yesterday, Jasper. My friend called me and he said, in average gold bull markets, the average in situ value in the ground per ounce of gold is about 10% of the gold price. So if you look at, when gold was, $300 an ounce, right? You'd have companies trading at $30 an ounce in the ground. When In the last cycle, gold was $2,000 an ounce, and companies average trading about $200 an ounce in the ground, which is 10% of the gold price at the top. Today, gold's trading at $3,500 an ounce US. The average resource company, including North Superior, are trading below $50 an ounce. So we're trading at 1 or 2% of the in situ value in the ground. Investors are not realizing how much value there is under their feet. These projects hold millions of ounces of gold, especially a project that has potential to become a mine. Buying at $50 an ounce when gold is $3,500 an ounce is just, it's a steal. It's a screaming buy in the sense of, I'm not saying go buy the stock today, I'm saying that the value that's there is so powerful because the gold price has gone up by so much. And these juniors, North Superior is trading where it was trading at 5 years ago. It's 4 or 5 years ago, the high of the stock was $1.45. It's trading at $1.35 today. It's still below where it was when gold was $2,000 an ounce, even though the company has grown dramatically in size, consolidated multiple projects, and the camp itself has grown in massive prominence. So there's just really good value. And insiders own 25% of the company. We run it like we own it. Very careful on dilution. Very focused on returns for our shareholders. All the attributes we want to see. I think insider ownership is one of the most important attributes of success in a junior mining company. It really gets the management teams thinking like owners, not renters. And that makes a big, big difference for your shareholders over time.
But so what would you like to see Northern Superior accomplish in the coming 12 months?
Yeah, I think everywhere we drill, we're finding more and more gold. So one of the exciting developments of the company has been that we've got about 4 million ounces in open pits. We've been drilling under the Philibert deposit, which is the anchor deposit of the company of 2 million ounces of resource. And we're hitting, 7-8 grams over 11 meters. So the best place to find high-grade underground gold is underneath an open pit. If you think about the cost of extracting, you mine out the open pit, and then you do a little ramp from under the open pit into the high-grade gold. So a lot of the really high-quality projects in the world have open pit and then underground potential. It's important for two reasons. One, the cost to get underground is dramatically lower because you've already done the digging to get there. Second of all, if you have 15 million ounces in a camp at 1 gram, if you can find 2-3 million ounces at 5 to 10 grams and blend those two together, you can dramatically increase your grade at the mill. And so at the high grade gold underground blended with bulk tonnage 1 gram material has a dramatic impact on the economics. So what we would like to see at Philibert is continued consolidation in the camp. We've done most of the heavy lifting in the camp. So, but the logical consolidation over time, we put everything together at some point in time. And then second of all would be finding more high grade underground ounces that can dramatically improve the economics of the project. And also continues to drill at scale. So everywhere where Iron Gold drills Nelligan, they're adding ounces. We drill Philibert, we're adding ounces. So adding more bulk tonnage ounces and adding more high grade ounces, that's only going to dramatically improve the economics of the project. And just to remind your viewers, this is road accessible. Our drill costs are about $200 Canadian a meter. There's power in place. There's roads. We're not in a remote area where you have to add a lot of infrastructure. And that has, major positive implications for a bulk tonnage project. If you have to put in all the infrastructure yourself, the hurdle is very, very high for a bulk tonnage project to be economic. So what we love about the project as well is it's got great infrastructure. And obviously Quebec is a very supportive, mining jurisdiction in terms of a true tier one jurisdiction for mining.
Yeah, indeed. I mean, you have low drilling costs are important, so you can do a lot with not so much money. But regardless, you probably make sense. You don't really need to raise money today, but it will make sense to raise money in the near distant future, especially if you want to ramp up drilling, other technical work. Maybe you want to consolidate some more. Who knows? So how are you thinking about the next financing?
So because we're such large shareholders, we the last financing we did, we raised $5 million. We literally could have done $15 to $20 million. And we only chose 5 because my calculus is always, how many ounces do we have currently? What are the value of these ounces? These are, to me, are highly strategic, highly valuable ounces. And so if we're diluting shareholders at $40 an ounce Canadian or $45 Canadian, whatever we're trading at today, I've got to be really confident that I'm going to be adding ounces at $5, $10 an ounce, which is the case at North Superior. But if I think those ounces are worth $100, $150 an ounce, it's a difficult calculation to do, especially when you already have, in my view, the economic scale is already present in the camp to be clear there's enough ounces here to justify a mine. We're very early, not even a PEA yet in this project, but it's already there. So does going from 12 million ounces to 15 million ounces in the camp dramatically increase its value? Yes and no. Yeah, it gets investors excited they're growing the project. But it's always a trade-off between that and issuing shares. So I'm a big owner to dilute. So yes, we will find some point in the time to do that. but we're always be very, very careful about that trade-off to dilution. We're not yet in a market environment where I said, 10% of the in-situ gold price would be $350. I'm not saying that our Superior should trade at $350 an ounce. Let's gauge our expectations here. I'm just saying on a relative historical basis, how cheap these stocks are versus where they have traded historically. And so, yes, we will finance. Yes, we can drill more and make more. We're drilling currently as we speak some of these higher grade targets that we've hit in our last drill program. We acquired Hazur, which is the extension of Philibert to the west. Even without drilling, Jasper, we had a historical hole that was never released by the previous owner, 400 meters west of our 2 million ounce pit, 1.1 grams over 25 meters. Never assayed, never released. Just to show you, so without spending a single dollar on drilling, we extended the strike potentially of our pit by 400 meters to the west without drilling a single hole. Well, all that space now is open for drilling. These are shallow holes. So we think with a relatively modest drill program, we can add a lot of value in terms of adding ounces. And we're always in that dichotomy between, issuing shares versus the current value of the project. And I think you can trust us to manage that very well because we are the largest shareholders, and we'll hopefully make the right decision for everybody on this process.
So then, final question on Northern Superior. That's consolidation. There needs to be, at some point in the future, consolidation in the Chibougamau Gold Camp. Could you talk about that? What's your view on that? Do you have any preferences for timing? Obviously, do you see a major company going in? Now it's you and IM Gold, essentially.
Yeah, there's a lot of scenarios, and not for me to speculate here. But what I would say would be our view, and I think the view everyone looks at this project is at some point in time these assets are going to come together, because you're not going to build 2 mills in the project. We're approaching a North Superior level of 4 or 5 million ounces, where you could potentially on paper justify a PEA kind of a standalone project. But it doesn't make sense to build 2 mills when you've got 8 million ounces there, 4 or 5 million ounces there. Like, it really, from an economic perspective, makes sense to have the two come together. There's many ways they can come together in many different scenarios. They're probably too numerous to talk, but there's a JV potential. There's an acquisition potential. North Superior buys out the ounces from Nelligan. Nelligan buys out our ounces. You JV the projects together. A new company mentioned comes from the outside and wants to acquire the project and put the two together. As IM Gold a seller, I don't know what they want to do with their assets, but whoever is going to build this project, Jasper, is going to build it together. And so we kind of feel that we own A+ real estate in a prime development scenario. Using a real estate analogy, you're in Manhattan in the 1800s and you own all the real estate on Fifth Avenue between two companies. It's going to get developed. You don't know who's going to develop it. You don't know how it's going to happen, but it's going to happen. And when it does happen, it's going to be at a much better valuation and a better outcome for both shareholders of all the companies that own these assets together. So that's really how I look at it. It's not a job of a $200 million market cap company to tell the market how we're going to, consolidate and raise $1 billion to build this project. But we could feel very, very confident that we're in an excellent position, and the project grows in desirability every single day. Every day we find more gold, more high grade, more ounces. Every day the gold price goes up. Every day the majors get more cash flow and more healthy. The more valuable this project becomes. So our job is to steward it as well, to acquire as much of it as we can, which we've done to a large part, acquired most of the assets that we like in the camp. And so therefore really just about how do we optimize that final outcome for shareholders.
Perfect. I'm sure you will do right by shareholders and yourself.
We're doing our best.
Yes. So let's move to Group 11 Resources in Ireland. You own, I think, 15.3% of the company. Could you give us an overview of the company?
Absolutely. So another one where, similar to North Superior, when I look for scale, and I look for camps that have scale, infrastructure, grade, geology to really become a mine. So what attracted me to Group 11 was in the area that's adjacent to Group 11's project, there's already 50 million tons at 8 to 10% zinc. So Glencore owns the Palace Green deposit. It's one of the few projects that Glencore is still actively drilling and exploring. It shows they're not much of an exploration company, but they're still active there. It shows you they think there's real potential. So 45 million tons, around 8% zinc. Group 11 owns Stone Park, which is 5 million tons at 10% zinc and shallower than the Palace Green. So already when I made my initial investment in Group 11, I already had 50 million tons of zinc, which is a big number, right? So why was the project not built yet? Why is Glencore still drilling it but not yet building it? Is that 8% zinc at 800 meters deep is marginal. To give you viewers an idea, it's about 2% copper equivalent, but it's 800 meters deep, but it's a lot of zinc, right? And then the Stone Park is 5 million tons at 10% at 400 meters deep, about 2.5% copper, but shallower. So you've got the long mine life or scale already figured out. What this project was begging for, Jasper, was high grade. Same thing we talked about North Superior or other projects where you can find high grade to add to the bulk tonnage side of the project. That's what unlocks a lot of value. And so I said to myself, look, this is not a project where you have to find another 20 million or 30 million tons to justify its own standalone mine. If we could find 5 to 10 million tons of high grade zinc in the area, this would unlock the whole 50 million tons. And whoever finds it is going to be instantly the most valuable company in the play because they're the keys to the project economics. So I followed the project. About 4 or 5 years ago, they drilled a single hole in the middle of nowhere, 20 kilometers away from Palace Green. They have a big land package. And they hit like 20%, 25% zinc in the hole. I said, wow, that's the kind of grade that we need to unlock the camp. So I made an initial investment in the company, bought my typical 9% or 10% of the company, whatever I did. And then over time, took a little time to vector in and figure out what was going on there. But a couple of years ago, they tagged into what I think is the groundbreaking discovery for this whole area, which is called Ballywire. And they started hitting 10 to 50 meter wide zones of 10 to 20% zinc over a kilometer and a half of strike. Like really exciting. And as a non-geologist, Jasper, very consistent, which I like. If I can understand the geology and I can say, you should drill here next, and that's that simple geology is also very good for mining. And it tells you the geologists understand the structural controls of the project. So they started tagging kilometer and a half of really high grade. And the best part, Jasper, is that it's at 200 meters deep. So the highest grade you have in the camp is now 4 times more shallower than the bulk tonnage of the project. So not only have better grade, but you have much cheaper access to mining costs. So that's what got the stock moving. I ended up going to 20% investment in the company. Ended up joining the board. I'm like this is it. This is the project that's going to make this whole project sing. And then about 6 months ago, we had even more exciting news, which is we drilled at the bottom of these holes in those 10, 50 meter wide, consistent massive sulfide zones we're seeing of zinc, silver, and lead. At the bottom of these holes, we were seeing unusually high silver and copper grades. Like I'm talking 1,000 grams silver, 3 to 6% copper, which is highly unusual for these type of zinc, lead, silver deposits that are typically have some background silver in them, but not splashy grades and very little copper typically. So we did more work and we realized in the regional geology of the project that there was a bunch of copper mines located in and around Ballywire at deeper depths. And we realized that because of erosion over millions of years, we had a fully intact zinc, lead, silver system. And below that, in we call the shales, we have potentially a fully intact copper silver system. So all the bottom of these holes we're seeing over now a kilometer of strike, really juicy, high grade silver copper hits. We put our first hole below this system and we hit a very splashy hole of about 3% copper and 500 grams silver over kind of 8 to 12 meters. I forget the exact lengths, but you get the idea. So something that's highly unusual, no zinc or lead really in that hole, but just basically pure copper and silver at very good grades. And so now what we believe we have is we have a fully intact kilometer and a half or longer system of zinc, silver, lead. And then 300 meters below, around 500, 600 meters deep, potentially a significant copper deposit with high grade silver in it as well. And so when you have 2 layers of the cake at 600 meters total depth, which is shallower than even where Palace Green starts, now you're adding real tonnage, high grade, high value rock, like copper and silver are much more valuable than zinc. And so the story is really starting to come alive here. The company was really running on very small budgets, again, trying to minimize dilution, back to my mantra. But what I love about here, Jasper, is the drill costs are about $100, 100 euros, $150 Canadian per meter. So very, very cheap drill costs, even cheaper than we have in Quebec. Shallow holes. So for $2-3 million, the company was getting pretty robust programs. But I've been telling investors that what this project really needed was, a 10,000 or 20,000 meter drill program, not 5,000 meters at a time. And so we raised our first brokered institutional deal about a few months ago. We raised $5 million. Now the company's funded for 25,000 meters of drilling. And to give you context, we've only drilled about 18 to 20,000 meters in the life of the project. So now we're funded to do more drilling in the next 12 to 18 months than we've done in the 5 years prior on Ballywire. So the extent of that, and that only cost us $5 million. So we think we're going to be fleshing out the core discovery. And now our first holes are going into the copper silver discovery. And we're also stepping out. There's 6 kilometers of strike that we've yet to test, only tested 1.5 kilometers. So we also going to spread our wings on a strike perspective and hopefully find, 2 layers of the cake here with copper, silver, and then the zinc target above. And the market cap is only 80 million Canadian or 85 million Canadian for what the stock is trading today. But in the context of a camp that has 50 million tons, that is a very, very attractive proposition in my view.
How are you thinking long term about Group 11?
It's very similar to discussion we just had on Northisle. You can see a common thread in my projects. I'm looking for all the hallmarks of, can this get built? Can this be a mine? And sometimes it's just pure geology where you're drilling it out and it becomes obvious. Other times there's some strategic financial dynamics here you have to figure out as well. So my view is the more high grade we find, the more we flesh out valley wire to be a deposit of size and high grade, the more valuable this whole camp becomes. And so again, same discussion we had about Northisle, whether Glencore wants to build it. We also have South 32 next door to us in the camp. Ireland is a very desirable, I think it got the number 1 ranking on the Fraser Institute for desirable location this past year in terms of drilling or which metric they use. So very desirable location, European project, critical metals heavy. So you've got to think that this would be a very attractive project for a larger mining company to develop. And Glencore is, I don't speak for them, obviously, they're a very smart, savvy company. They're in the trading business. So they're not shy to either build something themselves or trade someone else and to get it done and earn the offtake or the other metals trading business they get from projects. So we just think this discovery has really unlocked the camp. And because it's zinc, right, it wasn't getting a lot of attention. If this was copper, right, you'd be like, people would be all over it, have probably 5 times the market cap. Now that we discovered copper and silver, I think it's going to be the sizzle to get more and more investors to look at it. And when they look at it, they're going to go, wow, this thing really has the potential to be a mining camp. And nothing gets built, in my view, without Group 11. So we truly have, in my view, we have the most important card in the deck, which is the grade and now potential serious scale. So again, not for me to solve who's going to build it, but I can tell you this is a project at an $80 million market cap that investors should spend a little more time on. Zinc is going to be very important in the future as well, but now this multi-metal, critical metal project, it's something that investors are not really aware of and that has, I think, a significant amount of value, and it's worth the time spending on the geology here.
Let's definitely move to Northisle Copper and Gold, and if you could talk about, give us an overview of the company and your involvement in it.
Yeah, so I bought 10% of the company about 5 years ago when the current CEO, Sam Lee, came into the project. Sam's an ex-investment banker, used to have Barrick and some of the largest mining companies in the world as clients when he was at CIBC. So what I saw at Northisle was, copper was like $3. Back then I made my investment 5 years ago. They had a massive copper porphyry target with, billions of pounds of copper in the ground. Your classic BC porphyry of kind of 0.3% copper equivalent. So my view at the time was you're in a really exciting geological setting. It's got about a 15 million market cap. Clearly, it's not a mine back then because you needed probably $5 or $6 copper per our discussion earlier about saying you need higher copper prices to develop products. So I viewed it as a very attractive call option on higher copper prices in a great jurisdiction. It's in BC. It's adjacent to a past producing copper mine called the Island Copper Mine. So there's ports already in place. There's an airport that can land very large planes in the area that was built for the previous mine. There is power. There's even a wind farm put in next to them, and there's roads. So in these more remote kind of porphyry targets, to have all that infrastructure in place, that probably cost you a couple $2 billion to put in place. A port, an airport, roads, wind power. Most of these projects looking for elephants, you got to put that in yourself. So you got to add $2 billion to your bill before you think about building a project, right? So that was very attractive to me. And not being a geologist, but having a very good network, I loved the upside potential of the geology. So either copper is going to go up a lot, and this will be a well-situated project for a high copper price spike, or, which is my preferred thesis, which is a strategy company, we're going to drill for more, and hopefully we find higher grade, like Group 11, like North Superior, find higher grade that will unlock the project. And so the company executed very, very well. A few years ago, they found high-grade gold at surface at the Northwest Expo target, over 1 million ounces at 1 gram gold with almost no strip ratio. So all of a sudden, you have this 30-year copper mine, and you found 5 to 10 years, 100,000 ounce per year gold project at surface with very, very high economics. Instead of having a large, massive CapEx project where you need high copper prices to make money, you now have a very economic gold project that generates a lot of cash flow that can now fund the massive copper porphyry project in behind it. And subsequent to that, they've had more and more exploration success where they're expanding that higher grade, shallower footprint to the west, adding mine life to the front of the mine. And what's really exciting is that Sam talks about, tongue-in-cheek but also true, he thinks he has a 35-year starter pit. So he thinks what he has today, he put out a PA recently with some of the best economics I've seen for a junior mining project, a sub 2-year payback for a significant 30-year copper gold asset. He says that the 35 years they've found so far of mine life might just be the beginning of a massive feeder system below. So your philo type, again, this is a big hand wave here, but something has to be feeding all this mineralization that we're seeing at surface. And there's never been any deep drilling or systematic exploration approach to the company in terms of these deeper holes and targeting the bigger, because they didn't have the money to do it. They've looked at it before, but they didn't have the money to do it. So they just hired Pablo, who was the former VP exploration of Euro Copper, has big company experience. He just completed a $40 million financing. And now they'll be attacking not only the extension of the high-grade gold at surface, but also the deeper, potential billion-dollar discovery potential at depth. And at the same time, the BC government, Canada, is getting more and more serious due to the tariffs and the political environment we're in now about developing our natural resources. So Northisle has been put on the BC government's fast-track list for accelerated permitting as a critical project for BC and Canada. So they're rapidly advancing that front as well. And with all the infrastructure they have in place, this project really has a phenomenal shot of going all the way. And it's just starting to be recognized by the market as a premier development story. If you look at the NPV of their PEA aspect they put out, it was, I think, $4 to $5 billion NPV at current metal prices. And the stock's only trading around $400 million market cap. So still trading at 10% or less of the market cap. And they're adding value to that NPV every single day with drilling. So it's a great story. A plus team. They got some great board members, 2 mining Hall of Famers on the board. It's one that's really, matured into what I think is going to become a premier development story in Canada.
Awesome. So I will let you pick one company that we haven't talked about today from your portfolio that you would like to highlight or mention.
Wow, it's a choosing among my children. I would say in the yet to fully emerge category, I'd probably say Big Ridge Gold. And so why I picked that is it's in Newfoundland. It's still relatively small market cap, got about a 45 million or $50 million Canadian market cap. I don't know if you followed the news recently, but Maritime just merged with Newfound Gold. So that's a big news in the sector. So Maritime was building a modest size project, kind of like 40,000 ounce a year, kind of bootstrapping cash flowing project. And Newfound Gold, after being a market darling, has kind of resized itself to a more modest, kind of more manageable cash flowing project. So those two companies came together because they have, shared infrastructure potential in terms of the sharing mills and sharing development costs, and therefore having some true synergies, which, by the way, is my favorite kind of deal. I like deals in the space that have real synergies. If you have two projects that actually can, like Northern Superior, we consolidate a bunch of assets in the same camp. That's where you get real synergies, not by buying projects all over the world and saying you're a diversified junior. I really don't believe that much in that model. But what I like about Big Ridge is they got 1.6 million ounces of gold, including 1 million ounces at 2 grams in an open pit, which is very attractive grade. But it's on the water. So it's barge access, it's water access for the project. It's a past producing project that has all the metallurgy done. A lot of the technical work is done. And in Newfoundland, your permitting time, I mentioned earlier how long the permitting timelines are in Canada. In Newfoundland, if you're using someone else's mill, you have a fast track permitting process where you can get permitted within 12 to 18 months if all of your environmental studies and work has been done. So Big Ridge has been quietly in the downturn, has done all that permitting environmental work, has gone from 50% ownership of the project to 100% ownership of the project, being able to buy back our interest at the market was very depressed. And now is at a stage where we're very close to sanctioning a PEA, which is a preliminary economic assessment, with the idea of using someone else's mill. So there's a bunch of mills in the area that could take our ore. You have a new leading company, Newfound Gold and Maritime, that are coming together to become an emerging producer in the area. And we have what Maritime does not have, and to some degree what Newfound doesn't have, is very, very long mine life. And so we'd have the potential high-grade, long life addition to that emerging producing area of Newfoundland, and we have great access on the water to get there. So I think this company could really surprise a lot of people in the next kind of 12 to 18 months as we put out the preliminary economic assessment, as we show the potential value of this project. Could be one that could really jump up on the radar screen for more and more investors. The company's been very quiet, doesn't do a lot of marketing. We were busy, buying the 100% interest in the project and working on consolidating our ownership of the project. As that changes, we hope to be a little bit more active on the messaging front. And what we're seeing on the M&A front has been very, very positive for Big Ridge Gold.
Thank you. Well, that was a good overview of your portfolio and your investment philosophy, and a lot more that we have covered in this interview. So I will actually end this with, where do you see yourself in 5 years from now?
I have so much fun doing this. I think I'll probably do it till the day I die. I'll always be investing. And my first love is commodities. So I see myself continuing to invest in commodities across cycles and the early stage stuff. I love the institutional business as well, investing in producers and companies like K92 Mining that are just phenomenal companies to get behind. So I see myself investing always. I see myself staying very much engaged in the commodity space, whether it be in the micro caps or the mid caps, large caps, and the different hats that I wear, and continue to have a lot of fun doing it. I mean, it's a lifelong passion of mine. So I always joke, I've never worked a day in my life. I always feel like I get up out of bed in the morning and just love what I do, and it's not a job for me. So that's a great feeling. It's very, very blessed to have that opportunity to do something I love every single day.